Hello, viewers. Welcome back to another edition of Investment Fundamentals. If you haven't checked out my video, please do so at My World to View YouTube channel. Today's topic is about basics of investment and different types of investment which you can invest in. If you're new to the investment or a beginner or recently completed your college and you have some money borrowed from your parents or early in your career thinking about saving and investing money and you don't know where and how to invest, this video will help you out. This video have few topics to cover. Some of the topics here are: what does an investment mean? What do you want to achieve investing? And what are different types of or common investment types we have to invest our money? I've divided this video into two parts. Part one covers the fundamentals and very common and basic investment types. Part two will cover more advanced types such as property investments for either primary or rental, crowdfunding, which is an exciting topic, investing in emerging markets, and so on. Let's not waste any time and jump in straight into the first topic. Let's start with the first topic, which is: what does an investment mean to you? Either you can invest money or time. Your ultimate goal is to improve your life or lifestyle. In this particular context, we're going to talk about money and keep the time for later discussions. Investment is called as a vehicle to multiply your money. That's the key part. You can have multiple vehicles or a single vehicle to achieve your goal. It all depends on how fast you want to achieve or reach your goals. Multiple vehicles could help you to diversify your investment and withstand some of the ups and downs of the economy. All the crazy things happen in the economy versus single model or single vehicle where you are tied up to one type of investment, and any volatility can cause significant impact, either delaying or slowing down you to reach your plan or to achieve your goal. Next thing to look at it is how to make your money work for you than you working for money. If you have 10K in the bank, turn that to a high interest rate fixed income account. That way the money is multiplying. If you have money to buy a house, don't hesitate, do so. Here, with the money is multiplying by increasing the property value and in parallel building the equity too. There are These are some of the few examples I have where you can see money working for you. Idle money does nothing. This should be a partnership effort between you and your money working together on multiplying. It's kind of both tag team to reach your goal. That's what I call it as an investment mean. It's a process of how fast you can multiply your money and reach your financial goal. The next topic we want to discuss about is: what do you want to achieve through investment? The first thing comes into my mind is the financial stability or financial freedom. Financial stability and freedom brings you a lot of good things in your life. You don't need to worry about how to manage your daily or monthly expenses. What do I do if I retire early? What savings I have? How will I manage my expenses as well as my dependent expenses? If you have a massive student loan, how do I pay off my student loan? Or if I have a home loan, how to pay off the home loan, so on and so forth. You don't need to worry about all of these things if you have a good financial freedom. Thinking about a state where you have enough cash or investment on hand to pursue things which you are passionate about without thinking about how much they cost. That's true financial freedom. Having that financial freedom helps you to perform at the highest level, both in the personal as well as professional life, where you don't need to think about what if cases. Here are some of the examples I have. What if my boss is not happy with my work and decided to lay off? How do I manage my expense? What if I get an emergency expense to fix an appliance in my house. These are a few, but I definitely know there are millions of other things which you have gone through in a daily basis. Looking for an opportunity to have a steady income is another step for our financial freedom. Not worrying about your daily or monthly expenses. That's the key part. Plan or thinking about early retirement. This is another a goal people wants to achieve. Not worrying about the craziness in the corporate world and working on things which you are passionate about is always a good thing. At the same time, if you have dependents, thinking about how to help them, or how to get them to or how to get them or give them a better life by savings. That's another a goal people generally think about it. These are some of the common reasons, but there are a ton of other reasons what you want to achieve by investing. I will leave it to your imagination. The next topic is about different types of investments. The first investment type we're going to talk about is saving money in the bank. This is a very common investment. Every parent would have advised you to open a checking or saving account in the bank and start saving money. There are different types of accounts you can create. You can create a checking account, which is very common, or you can create a saving account, or you can create a high interest accounts like certificate of deposit or CDs in general, we call it as, or shared certificates. Checking accounts will give a minimal interest rate. Checking and saving both gives you a very minimal interest rates. However, CDs or shared certificates provide you a very high interest rate. There's no difference between a certificate of deposit or a shared certificate. It depends on what type of bank they're providing you these certificate of deposits. If you're going with a general bank, a normal bank, they call it as certificate of deposits. If you're going with the credit union, they call the same certificate deposits as shared certificates. Some of these CDs, you have money or logged in for a time period, which is decided by the banks. It could be ranging from anywhere from 3 months, 6 months, 12 months time frame. Depending on the time period, your interest rates will vary. Once you fix up a CD and a time slot or time period, your money is logged in. And if you want to take money out from the bank account or from your CD or deposits, they generally don't allow you. And they allow you, but with a penalty. So please consult with the bank before taking money out from these accounts, as there are few penalties if you have to take it before the maturity period. These rates, generally the high interest rates like CDs or shared certificates, they are kind of a fixed income accounts, but the interest rates are decided based on the Federal Reserve through federal funds. This is not decided by the bank. Instead, they will have some kind of leverage to increase or decrease the interest rate to attract more customers. But in general, these rates are decided by federal government. The income which you earn from the bank accounts, whether it's a checking, saving, or CDs, they are generally taxable, and you need to report in your year-end tax filing. You will find the interest income from the Form 1099 INT. Banks will provide this at the end of the year to help you file the interest income which you earned from keeping your money in the certificates of deposit or shared certificates. So if you have not received it, please reach out to your bank and make sure you get that 1099 INT form and report the information in your tax returns. You will find all the details in the form, where to fill, what information, what amount to fill, everything detailedly written out. Please follow the instructions. Keep yourself up to date on what is happening in the economy and federal government monetary policies. When you see Fed increasing the interest rate, it's an opportunity for you to move the funds to these CDs or shared certificates, where you will get a better interest returns or in general returns compared to holding it in bonds. Most of the bonds pay you very minimal interest as the risk-free or low risk advantage overshadows the low interest rate benefits. But why do you want to invest in bonds if you can get the same benefit from CDs and shared certificates? Current rate, current interest rate at the end of 2023 was around 4.8 to 5 percentage, which is a very good return compared to bonds. We will discuss a bit more detail about the basics of bonds in our next topic. But for now, think about it when you have this type of benefit where economy where you have a higher interest rate and your CDs or share certificate could give you a better return, then take that opportunity. If you want to learn more about the current condition, the rates, interest rates, what the federal government is fixing, those informations you can find it either going through some of these financial websites. CNBC is another very good source. Podcasts like Marketplace, Investor Business Daily, so on and so forth. General rule of thumb for any beginners is to keep 5 to 10 months of rental or home loan or monthly expense ready in your checking before investing money, any excess or additional money into these CDs and shared certificates, just to protect you from some of the penalties. This will basically help you out. Some of this backup money which you have 5 to 10 months will help you out in case if you come across any emergency expense. Before investing in the series, check the time period which meets your investment needs. The longer the holding period generally gives you a higher interest rate returns. However, you need to understand how long you can keep the money locked in. If you want to learn more about this CDs and shared certificates, please reach out to your bank and understand all the options and the penalty details before investing. But if the CDs are not your option, then you have checking and saving. And if you decided to stay with checking and saving, there is no penalties on your withdrawal from your savings or checking accounts. You can withdraw anytime. For more details about the bank accounts and their rules and regulations, please reach out to your bank and understand in detail. The next investment type is about stock market or and bond market. Stock market is another common investment type. Here we have a short-term and a long-term investment options. It all depends on how fast you want to multiply your money and the investment style fits your lifestyle. If you're looking for an aggressive growth where you would like to get the returns faster in a very short period of time, like daily, weekly, monthly, the short-term plan fits your model. This is a common practice what day or swing traders do in the stock market. This is highly risky and has a good chance that you will lose your money if you have not invested in a right way. So think about this practice deeper. Train yourself before doing this day or swing trading, taking the approach. The next model is about long-term model. Long-term model is more secured model where you can invest in companies which has solid fundamentals with excellent balance sheets and investor friendly environments. And other long-term models like ETFs, exchange traded funds, or mutual funds, which are very low risk approach and safer bets. They tend to grow slower, but they are high risk tolerance. Under the long term plan, you can invest in companies which will pay you a good dividend, which is a quarterly yield that many companies pay their investors. This is a very attractive option for our investors. This will be a solid, steady income which you can invest back into the stock or If you're closer to retirement, you can use or cash in the dividend and pay your expense or pay off your loan instead of investing. If you want to learn more about the stock market investment fundamentals in general, please check out my video about the stock market investment fundamentals. I'll post the link in the description section. The next is about 401k and IRA. 401k and IRA are retirement plans that allows you to deposit a small portion of your monthly salary, which will be invested in mutual funds, ETFs, or stocks. There are two common options available, Roth and non-Roth. The choice between the two is based on when you want to pay the tax. The non-Roth option invests money before tax or deducted from your income, while the Roth option investments are after tax. Please research more further to identify which option fits you best in your investment approach. The other advantage of going for 401k is you can take a loan for your primary home buying. And this is an option which many of the investors don't know about it, that you can take a loan rather than withdrawing fully from your 401k. If you're going to buy a primary house, they have an option to go take a loan from your investment and pay it off instead of taking an additional loan outside in the banks as a mortgage. Another interesting option for investor is that you can invest some of the 401k money through brokerage link account, which you can set up under retirement plan. Caution is that you should have an advanced trading knowledge, which is important in the stock market, and knows how to handle risk, actively monitors their account closely, and also reacts faster when there is a negative sentiment in the market. You need to react faster, either selling these stocks instead of losing all the money or buying more to gain more profits. Reason for caution is that the funds which you are using are your 401k funds, which is your retirement funds. Using these funds, you need to be extra careful so that you're not losing your retirement funds. And when it is required at the later stage of your life, and if these funds are not there, then you will regret the option of taking this approach. And generally, people tend to take a low risk approach by investing in some ETFs and other stuff. But when do you take this approach? As an investor, why do you want to take this brokerage link account tied up to your 401k plan? As an investor, if you're not happy or looking for opportunities to invest in a strong fundamental stocks like Apple, Microsoft, Google, Amazon, you name it, there's so many good stocks in the market where you can get a very good return with good dividends. And you want your retirement funds to grow faster compared to mutual funds or ETFs, then people exercise this option. People tend to put kind of 10 to 20 percentage of their funds in the brokerage link to actively trade other than their individual brokerage account, which is not tied up to the 401k plan. But staying extremely cautious or having extreme caution is required in taking this approach. Only investors who have good stock trading fundamentals with a proven track record and also has a proven track record of getting consistent high returns, knows how to handle risk, and have a mature and working investment rules tend to take this approach. And as a disclaimer, that it doesn't guarantee that you will get the best returns in this approach. Instead, it depends on your financial knowledge and advanced experience in the trading stocks. So think deeper in this approach before investing it. The next option is buying or selling bonds in the bond market. Bond market is not same as stock market. Stock markets generally you can trade equities or shares issued by the company. But the bond market is about trading debit securities. Debit securities, in layman terms, it's a loan the investor is providing to the company or government. And in return, the company or government, in this particular case, the borrower, pays an interest committed at the time of issuing the bond to the investors. The borrower, as an example, the company or government, generally called as borrowers, they issue the bonds when they want to fund some local projects or manage their expenses. Example, let's assume that the government wants to build a school in the community. They issue a bond for a 10K and promise to pay the investor an interest rate of 1 to 2 percentage until it hits the maturity period. The maturity period is when the borrower commits to return the money back to the investors. This is a fixed income model, very stable and high risk tolerance, but the returns are very minimal. You can go for a higher return bonds like I bonds. You can see here. This is issued by treasurydirect.gov. You can log into their website, create an account, and you can buy inflation bonds there, which pays you high returns, high interest rate twice in a year. And generally, these inflation bonds are very attractive if the inflation is very high in the economy. They are taxable. If you're looking for tax deferred bonds, then check out the Series I bonds where you can defer the tax for later. If you want to invest in bonds, please do research a bit deeper on the pros and cons before investing in the bond market. This video just gives you a kickstart for your investment on the bond market, but this is not a comprehensive video. You can do a bit more research before you invest in this. Check out my next video on investment basics and types, part 2 or edition 2, where I'm discussing about a bit more advanced investment types like investing in primary home or rental property and the pros and cons in doing that, and an exciting topic like crowdfunding projects, how to invest in early stage IPOs, and what are the tools and platforms available. If you're excited about real estate investment, there's a crowdfunding project for real estate investment too, and so on and so forth. Please tune in for my next video. Thanks.